Good morning, everyone. It is Thursday, June 10, and we've got some inflation numbers that just came out. This is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. Before Brian and I do some analysis on what's going on in the markets right now, following the inflation numbers here in the US, the report that just came out, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And lastly, this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, so what do we have going on today? You can see it right here in this chart. The inflation numbers came out. The year-over-year number, 5%. The month-over-month number, I think, was 0.6%. Was that right, Brian?
For regular CPI, yeah, core was 0.7.
Core was 0.7.
Yeah.
Yep. So we're seeing that inflation a little bit more than originally expected. I think obviously, gold made an immediate move, spike higher. So did silver. We are going to do some technical analysis on this is gold, and then we'll take a look at silver as well. But obviously, with inflation, you're going to see these types of commodities move. So I'm not going to hold on to that anymore. Brian, I'm going to flip it over to you. Let's take a look at what you've got on the news, and then we'll start playing with the charts.
Yeah, I was just looking at that. Just saw this come across the wire just a little bit ago that France and Switzerland are doing a joint cross-border digital currency, central bank digital currency experiment. So it'll be the first kind of cross-border experiment. That's pretty exciting. Yeah, so far this morning we had the monetary policy statement. We mentioned it for the euro, and there's been some European movement from that. At 8:30 today, obviously, we have the ECB press conference, CPI. Again, I look at the month over month. That's all I care about. Obviously, yesterday we mentioned it. We expected this to come in higher than what the forecast was, and it did. It was supposed to be 0.4, came in at 0.6. Core, again, core is, remember, when we strip out food and energy, which there's been a lot of inflation in those two. If you don't believe me, go look to see what your gas price is doing. 0.5 to 0.7, so that's quite a miss to the top side. Remember, this is supposed to be transient. We're supposed to see inflation, but it's supposed to disappear, right? The joke yesterday with my private room broadcast was that they didn't actually understand what transitory means because we haven't seen it retreating at all. And they're saying, again, it was supposed to not go up as much, and it went up more than expected, and we're almost, exactly where we were previously. So we're still chugging right through. So this is big. And if you remember me saying yesterday, the way to play this would have been before, right? We talked about in the oil and gold education summit we did a few weeks ago that the three best times to trade are pre-news when it's in a level, session open, and then parabolic retracements are the three kind of main ways to kind of take advantage of very kind of focused trading. That's exactly what we had today. So looking at a gold chart, here you go. Yesterday we were sitting up here where the yellow dot was. We mentioned we had one level that was tested. It wasn't the greatest level. And again, you can see it. What is the rule here? Fourth hit is when we're out. There's one, there's two, there's three. It broke on number 4, came back and actually touched it again. And then Harry Pottered. And if you remember yesterday, we talked about the two strong levels. We didn't care which direction it went in. We were looking for price to get to 1914 or 1870. Well, guess what happened this morning? Here's the European start. It came down. That's where that first short was. The European traders drove the price of gold right into that 1870 area. And if you mentioned what we said yesterday was, for these news releases, a lot of time you want to take advantage of the shorter duration contracts, particularly the binaries, right? Well, if you look at the 8 to 10 binary, and everybody always says, I don't know if I can do this, and they don't have confidence in themselves, this is how easy this was. Price dropped. Here's the 30-minute level that we've talked about now for over a week. These little black dots right here, these are the 2-hour binary strikes. As you can see in one candle, and again, it's not even been 20 minutes yet, we've gone through 1, 2, 3, 4, 5, 6, 7 strikes. So had you found something in the out of the money range for a rather cheap entry, guess what? You're already out. Okay, done. 15 minutes of trading and you're finished for the day. And as you can see, it's still continuing to push higher, and the retail trader hasn't even stepped into the market. So one of those things. Silver is basically the same matchup for you guys. Again, silver did the same thing. It came down to a level that we had talked about, and we marked it off as orange, saying, hey, listen, ideally, we like the 27.20. We like the 28.63. But if we could get into this level for the open, or for the news release, we'd be into it. And again, the same type of response. I haven't marked the binaries off here because of the two, I think gold is probably a little bit, I don't know, in my mind, it's a little bit safer, right? It's not as sporadic. So if you're new to trading the metals, I think that's a great place for you guys to start. But it's the same exact setup. The European market drove it down into a level where it's seen buyers coming in the past. And this is just supply and demand. If you guys are, kind of curious why I'm drawing these things where I am, it's understanding price action and supply and demand. But this is what we're talking about as far as, quick movement. Yep. And again, do you need to sit here for 18 hours and watch this candle literally bounce up and down? No. Could you have gotten a good risk to reward trade out of this one? Absolutely. If you're not sure what it looks like, go in there, go to the 2-hour binaries, look at the strike differential. And I don't have it up on my screen right now, but this is a lot of movement. If you're wondering if you could have got into something pretty cheap, in worst case scenario, you lost a little bit, right? If you're looking for something a little bit farther out of the money, because we knew there was going to be a big move today. Why? Because everybody is talking about inflation. So it's a way to stack the odds in your favor. What are the hot buttons out right now? What did we expect to see, right? Everybody's talking about, hey, inflation, inflation, inflation. We haven't seen it. We talked about a strong dollar or a strong gold coming back into the market. And then this is the way you set up a good risk to reward ratio based trade, right into a 30-minute level for news.
So by the way, I want to put this up on the Nadex charts. I mean, you could really see it. These are the same levels Brian had on his. And you can see how many strikes do we move through? We were down here before the news announcement. We told you yesterday. Now, if anything, this is a lesson for next month. There's going to be the same inflation report. So there's a time when you can be looking at these screens. And again, we went through 1, 2, 3, 4, 5. And we went up close to the 6th. And there was the 7th one down here. There was opportunity here. Now, what's going to happen from here? We don't know. I am going to back this up a little bit and take a look where gold has come from. Gold did get pummeled, but we're seeing inflation, and it has been making some pretty volatile, and these are parabolic moves. You can see that the parabolic move it made from at the end of last week, and then here just from the last day. And I'm going to come back in. Here it is again. That gets hammered down, and there was the opportunity to spike up. I do want to point out we have that 1900 level up above, which, could gold get up there and touch it? Last time we said that, it went up there, touched it, and then dropped. It's done that several times. I don't know. Keep an eye on that. The big move has already happened, but could this continue to extend as retail traders come into the market? It could. We are seeing that inflation. Now, by the way, there is one other thing I wanted to mention, because we are seeing this inflation. There's no question about it. But what you will hear to counterbalance that is it's the base effect. Now, if you're not familiar with what base effect means, we're comparing now there's the month over month numbers and there's the year over year numbers, and that base effect works on the year over year number, where they're comparing, well, what was it a year ago? And there was a collapse in the price of goods a year ago due to COVID. It was a pretty dramatic collapse in quite in a broad array of goods. Now the demand is back up, and so that's why we might see this spike in year over year. That's that base effect that the Fed is saying is going to be transitory. We'll see it now, and then come fall, that should start to drop off, is what the Fed is saying. That month over month number, though, a little bit different, because that is, there's no base effect from last month. So that is definitely a bit concerning.
Like I said, I don't think they actually know what that word transitory means. I feel like it's like the hot button of the month. Like everybody should just use it. Germany used it just recently as well, but I don't think they actually know what that means. Or maybe just the general public, and maybe we don't know maybe it's on us. Maybe it's not on them. Maybe we all misunderstand what that word means. It's hard when the majority is wrong. Yeah, it's hard when the majority is wrong,
So, all right, that's on the U.S. numbers. Brian, did you want to do anything at all?
I do actually have something else, because we do have another release today. Yeah, we could talk about the euro, guys. The euro did the same exact thing we expected. The yen is overall weak because of what they expect the indices to do today. But I want to review oil, because last week we talked about this as well, and a lot of you missed the opportunity on it. Here's the oil. Remember, every day of the week there's typically 1 or 2 news releases, and how do you take advantage of it? This is oil. Okay, yesterday here, I'm going to drop this down to 5 minutes so we can run through with news. And again, I try to teach you guys as much as we can, right? Yesterday we were sitting right here. Literally, let's see. I'm gonna put an X on there just so you can kind of see. We were sitting right here yesterday, right? What I mentioned, remember we've talked about this before, right? I'll go back up to 30 minutes so everybody can see it. Remember we talk about the little big scenario? The little big scenario, right? The little big scenario, except when we have big bigs, right? But we have the little big scenario with oil. And we talked yesterday about how we had a very little, right? It was a very, very small, okay? Here's what we had for the oil inventory report. We were sitting right here when we talked, okay? We had a level up top. We mentioned the level of basing up there. We had the little situation. Now, in this case, typically I like for it to come just a little bit closer. We ended up tagging that level at 1010. I've told you guys in the past, the weighted trade releases is within like a half hour beforehand, see where price is being driven. There was no real kind of trend based off of the overnight. I mean, the European session started here, kind of went up, grabbed these levels, pushed it down, and it fought its way all the way back. U.S. trader stepped in line just here and drove it higher again. All it did was drive it up into a level. Now, see this 70.50 right here? I missed this. I ended up analyzing this with my group at about 10:20, so we missed the entry for it, unfortunately. So I can't say that, hey, I made $1 million from this, because I didn't. But this is how it works. And again, it's hard to do presenting and trading all at the same time. It's difficult. That's why we kind of rush out of here sometimes. Right here, 10:10 would have been the way to grab this. Okay, had you grabbed this a little bit earlier, that's fine. This is a call spread. Okay, this is a call spread. As you guys can see, look at this. It barely touched it. And what did it do for the rest of the day? Drove it straight down. And if you remember, and if you guys aren't sure what the number was yesterday, here is the oil number yesterday, right? It's green. We're down 5 million barrels. Why the heck is it going down? Because again, remember, the numbers are just there to report. They don't actually change what's really happening, but it's a way for traders to kind of lose their money, because you say, hey, it's green. It's got to go higher, right? Because we're losing it. And what did it do? It did the exact opposite. Now, there was an immediate push down. And again, everybody that lost their money on that initial buy probably saw this rallying and said, it's time to go. And it did. It rolled back off of there for about an hour. And then at 11 o'clock, it says, nah, just kidding. And continued to push all the way to the downside. So again, this was a big move, right? The reason I'm telling you this is not to rehash the past, but it's because we have another release today that just happens to be over here in natural gas. Okay, natural gas I know is not as big as oil. Oil is the big one, but natural gas is another one out there. And again, Forex Factor has it listed as a low because, again, it doesn't really move the currency market whatsoever. But it is another trade setup. It is another news release, okay? We don't need to go down. Let's go to a 30-minute. And this is kind of the scenario that we're looking at right now, right? We saw a parabolic move 2 days ago. It went straight up. It ran into sellers and went right back down to the origin of the move and then kind of based and is pushed higher. So again, right now it's a little bit early. You can see the natural gas news release is coming in at 10:30 today.
10:30.
Yeah, so we will be able to see basically at the open, the retail trader is going to get in there and it's going to be fast and furious all over the place. Why? Holy crap, there's inflation. Everybody said there's not. So there will be some movement. After that happens, again, it will tone down by 10:30. That's when a lot of the profit taking will happen and reversals happen at 10:30. We can see where this is driving. Right now, it's like, oh, God, we have inflation, right? It's going up and down. So we'll have to see if we drive high or low. And again, there's some levels a little bit lower if you guys want to draw them on your charts. Again, there's a little bit of a level down here at 313. I would say, definitely watch out for this area up top. There's a little bit of an area up here. We're kind of smack in the middle, but, another way you can do it. And again, there's not going to be the volume right now because it's only, it's not even 9 o'clock in the morning. You're seeing that the candles in the overnight are not big. Look to see where some of these moves are, maybe even on a lower basis. If we drive in a little bit before, there could be another zone. Now, it's not that natural gas, I would say, is not as good as oil as far as the releases go. But last week, we had big movement off the natural gas inventory reports as well. So it's just an example of another news release that you guys have the ability to trade. And as I said, overall today, with this news, the media is going to be all over this. It's going to be kind of like a nonstop, thing there. Even the ECB raises the 2001 inflation forecast 7 minutes ago. They said it in the press conference to 1.9 from 1.5. So inflation is everywhere. I will say, because again, I am mentioning this. Let me go back up to gold real quick.
Yeah,
I would be cautious, and you can see we're pushing even through another one.
We're just going higher.
Yeah, I would be cautious with trying to play a parabolic retracement with this one. The reason why is because, again, parabolic retracements have a specific set of rules. One of them is about fundamental shifts in the market. A fundamental shift is something like an interest rate change. A release that's just like, oh, here's how many people file for unemployment. That's not a fundamental change in the way that business is being done. If there is an interest rate change, that's a fundamental change of how business and lending will occur. I typically don't use parabolic retracements. Doesn't mean that this won't pull back down again, because until the Fed actually does anything, it's just hypothetical strength right now. They may say, hey, we're still not changing anything for 2 years. And it's like, wah, 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 it'll roll back down.
Yeah.
Yeah, so it requires the Fed, but just be cautious with that one. If you guys are like, hey, Brian said anytime there's a pop short. That's not what I'm telling you.
No.
Rule-based strategy. So,
in fact, to me on this one, this is almost the parabolic retracement of the move down. I'm not quite sure why, and you've got, I know you've got your reasons, but why gold was pushed so much lower
because why
all
would you
day
pay more for
yesterday?
it?
It's
right. Why would you pay more for it?
Right. They pushed it
Simple as that.
down so they could snag it, because they knew that we knew this number was going to be a big number. We just didn't realize how big of a number it was going to be, and that would be beyond expectations. We got this huge spike higher. By the way, I will tell you, in theory, this should have been bad for equities, but equities right now are all looking to open in the green. Dow up about 150, just shy of 0.5%.
Until they raise the interest rate, we're still in the low interest rate environment.
Right. So
hasn't changed yet.
So there you have it. Interesting times. And yeah, 10:30 this morning, you got that nat gas number. You might want to take a peek. It's an if this then that situation, but there might be an opportunity there around that announcement. Brian, you got anything else you wanted to share this morning?
No, that's it. And like I said, I mean, natural gas may not be big because this is such a big deal right now. And again, you're seeing oil move. Why? Because the Keystone Pipeline was canceled. So again,
and then there was that. Right. So there's just a lot going on. There is a lot going on. All right. With that, you got any questions for Nadex, please email us, customerservice@nadex.com. Brian is also very accessible, and I like that he interacts with you guys. If you've got any questions for him, feel free. Email Brian, support@keeptradingsimple.com. What did we cover today? Today it's all about inflation. You're going to be hearing that. The year-over-year number, we're up at 5%. We haven't seen that since 2008. So that's a big number. We've got the month-over-month at 0.7. We are seeing prices rise. Tomorrow, there's going to be the consumer sentiment number. We'll see how consumers are taking that into regard. So there is going to be some volatility. This week is not over. In fact, this is kind of what everyone was waiting for. These are the trading opportunities today and maybe even tomorrow. Even though we're in summer, things are popping. With that, Brian and I will catch you again tomorrow morning. Want to wish everyone good luck in the markets. Thanks, everyone.